Hello guys, welcome back for another Monday Outlook. I want to remind you that I shared a really nice video on the mindset part of trading on my YouTube channel. So make sure you check that out. It's got some very good insight and valuable lessons I have learned, and something that I still keep reminding myself day by day. First of all, I want to really wish you an amazing week. Uh, Not really a busy week for news, so I'm not really going to through the calendar. I'm gonna quickly share a couple of charts and maybe just do a little conversation with you, nothing major. So let's start from GJ. So as previously mentioned, I only trade two pairs on the forex market. This mainly to restrict first of all my risk, because the more pair you trade, the more your risk exposure increases. Because, for example, let's say if there is a setup on I don't know, let's say I trade the Euro USD and GJ. There is 3 setups a week, because on Monday there is a setup on EU, on Wednesday on GJ, and on Friday on EU again, for example. So I have three let's say setup, which can be either 3 stop loss, 3 wins, 2 wins, 1 loss. I mean, the statistics is is random, but just to say that there is a max loss of 3% for the week. Instead, if I have 6 pairs, I can find a setup on each session, or maybe even if you trade two sessions. So let's say you trade London and New York, you can find 2 setups a day, which times 5 weeks of market, hoping that you take only one trade per session, because many people can take multiple trade per session. You have a 10% possible drawdown in case you lose every trade per week. This means you can lose 40% of your account in 1 month, and probably all in 3 months. So as you may know, the statistics of the trading is like 90% of traders lose 90% of their account in 90 days. And that's fact. So yeah, just to explain you that if you have 2 pairs, you're gonna be, let's say, more willing to wait for the best opportunity, because these let's say A+ setups or good setups are not gonna happen every day. Therefore, you're gonna have less, let's say, shitty trades, a shitty, let's say, decision to take every trade, because you're just looking at 2 pairs. You're gonna see some clear setups. If there is no setup, you're not taking any trade, which means you're saving capital for better setups. And also you're not forcing the market to give you that setup that they, because maybe, let's say, if you have 25 pairs, you're gonna find a setup each moment. But yeah, just to explain you the reasoning behind me trading 2 pairs, is not like, has nothing to do with let's say, I know many people are like, okay, I trade so many pairs. They seem to be, let's say, knowing about the market more than someone that trades only 2 pairs. But at the end of the day, especially in the forex market, it's just about speculation. You can be the best, let's say, analyst of all times, but still don't make money in the market, because you don't have the right timing, or you don't have the stop loss, you don't have good risk management, and all this nice stuff. So especially in the forex market, is about strategic planning. Is a speculative market, so you want to reduce the risk for you and for your capital to get, let's say, slaughtered. So it's very important, at least for my humble opinion. Like, I know many of you know about Sean Lee. He's been back recently on YouTube. He's been for maybe one of my, let's say, first mentors in terms of mindset and everything. I remember while he was still doing those videos long time ago. And I know that he trades so many markets, and I don't think he's profitable. No, not saying that I don't want anyway, I don't want to say nothing. I don't want to touch this point, but yeah. Anyway, all of this to say that you want to reduce the exposure of your capital to shitty trades. That's why you want to choose 1 or 2 pairs, especially depending on, let's say, I'm a scalper or intraday. I rarely, let's say, open trades on the 4-hour chart. So if I trade only, let's say, 4-hour and daily, it's okay for me to have 4 or 5 trades, because that way I'm going to reduce the FOMO. I'm going to have, let's say, more pairs to look at. I'm going to wait for a good setup on the 4-hour, take the trade. Maybe the next trade is going to happen in 1 week. But when you are intraday or scalper, when you are, let's say, going into the session, looking at what's going on, let's say price is reaching a point of interest, you want to get the trade, you know, it's very, let's say, it's the best for you to reduce the amount of pairs you trade, and to reduce the amount of, let's say, even time you spend on the chart. Because let's say in my case, I'm trading the 5, the 15 minutes, sometimes the 1 minute. If I want, I can go in a session and find a trade. But if I do this 5 times a day, then probably I will blow my account in 1 month. So it's very important that not only you understand which style of trading you are, you understand that depending on your style, you need to adjust your environment to perform better. So in case you're a swinger, you want to have slightly more pairs, so you're not gonna be in FOMO, you know, I'm missing the trades because you only have, let's say, 4-hour and daily setups. In the other hand, when you're, let's say, trading like me on the 15, on the 5 minutes, so we can say you're an intraday trader or a scalper, you need to reduce your pairs, because then you're gonna see so many setups, you're gonna be over trading. So that's the opposite. So for example, I'm just telling you that one of the most simplistic basic of trading, still many people don't really follow it. So if you're a swing trader, make sure you have enough pair to get into FOMO. And if you're a scalper, make sure you have not a lot of pairs, so that you don't get into over trading. But yeah, sorry for this introduction, slightly longer than what I supposed to do. But yeah, let's go into the chart. So let's say this is GJ, one of my pairs. I really like this pair because it's very volatile, so you can get really nice trades. So in my humble opinion, remember, this is not financial advice. So what we can say here is a low and a new high. We are in the 4-hour. We still didn't reach this area, so I'm not concerned with shorts. So right now we have this big demand area here where price has been jumping multiple times. Now, you probably don't know what Wyckoff is, but Wyckoff is a schematic of manipulation of price, where the, let's say, reasoning behind this process is to get as much trader involved in the market, both selling and buying. So in simple word, what we have a clear, sorry, I'm not gonna use this thing anymore. Okay, we have a clear level of liquidity, which can be seen as a support, where people can say, okay, price start to push higher, so maybe they're gonna put their limit buy in this level. So price takes first this level, does the actual mitigation, which is this point here, then activates the buy order, and then comes back into this area to create liquidity, so which means creating more buyers, which are gonna buy, because this is, let's say, a trend line, right? This is the second touch of the trend line, they're gonna buy. It's making another high, which means even creating more buyers. Why? Because it needs sellers. So every time, you know, the market works like that. If you don't know, this means it's still at two basic levels, so you need to maybe catch up with this. It's a zero-sum game. So every time market is selling, there must be buyers, and every time market is buying, there must be sellers. So in this case, we create more buyers, you know, this point and this point, create liquidity, which means stop loss of the buyers or in this area. Then we start to sell to who? To these guys that open the buy position in this, putting the stop loss below the low, and then we destroy all of them with the stop loss, let's say stop loss hand, but it's not really a stop loss hand. They came back to re-mitigate because maybe there were more orders to fill up or everything. So in my humble opinion, this is gonna be the low. If it's not the low, maybe this area can be involved, but still looking to buy. So if I got a retracement, I'm gonna evaluate buys from this area to go higher. In case, and that's why this is a speculative market shows signs of selling pressure from here, I'm gonna probably open sell position targeting this area here, because as I said, I see price moving higher. 160, this level, 159.5, this level is something I'm gonna look out for. That was GJ, not really going into too much details because there is no point, as I said. So now let me just delete this thing very quickly. Okay. Now let's go EU. Okay. Let's go EU. So mainly with EU, what we've seen is this: we made a low, we made a high, so we know we are still into bullish structure. This low is still intact. We then came back to this area, and this was a similar Wyckoff thing. So we manipulate the high, create liquidity. Sorry, I'm gonna do it with the other things, so it's gonna be clear for you. Slightly different because the Wyckoff scheme is not like a fixed thing. It's just a theory behind price manipulation and building liquidity to move and to get the injection of order the institution need to. So as we can see here, we have a double top. So we create liquidity, start to have sellers. Okay. We gave them the new low here. Then we take their stop loss because they were thinking, okay, this is the low, we're gonna go lower. So we take their stop loss. Then we create buyers because now, you know, they're gonna put, let's say, people that here were going long, they put the buy stop here, so they got activated. As soon as they got activated, we got the buyers. So then we sell to them. We take out even the stop loss of the people that didn't take stop out here, so maybe they had the stop loss slightly lower. And after we have all these buy orders, because you know stop loss, sorry, when you go to stop loss position and you are in a buy, then the sell activates. So they got a lot of sell, they can buy, and they buy. This is what the institution do. They manipulate price to get what they want. So now, what's my take on this? As every smart money concept, smart money is just a theory. And I'm talking about this in all my videos. Like people get distracted about what really is smart money. Smart money is simple. You buy at discounted and you sell at premium, and then you just use liquidity to distinguish which levels are going to be, let's say, used and how to add more confluences in your trading. So what we have here, we have a high broken, which means people buying here are, let's say, people who bought here are in profit. So this was a good buy point from this from this point of view. So what we can do in this case is to, sorry, I don't know why I'm in this 5 minute. So what we can do here is this: take a fib. Okay, what I have in my fib is just a 50%. So we are now at the first area, which is this one. Then I have 1, 2, and another area here. These are the area I'm gonna look for reversal. I mean, not for reversal, but to trend following. So in case something happens here, then you're gonna start to open by position and target the first eye, this one. Long-term eye will be this, you know, because as swing structure is bullish, we expect this eye to be taken in the future. In the more short term, what is happening here is a bit complicated, so I'm not gonna go too much into details. I'm gonna show you a position from last week. So as you can see, let me see in the 4 hour, okay, in the 1 hour. Okay, I had this candle here that anticipated this big bullish move. So I had my area, yeah, I was waiting price, and as you can see, price arrived here, create liquidity, mitigate the order, change structure with very impulsive candles. Then I took my position here. I'm now at break even. And my target was this first level of liquidity, which I will probably gonna take in the next minute or so. But yeah, this is short term. You don't really wanna know about this. What's important is that if we get a chance, to create some, let's say, nice structure, you want to target this high. And if not, let's say if we have, because as well we have liquidity here, as you can see. If not, then we're gonna go back to these areas here and look for buys as well. That's something that you want to look for this week. Now, BTC weekly chart. So we are now approaching this level. Price is really stagnating right now. I won't be, let's say, doing or thinking anything until we either tap into this area and drop, and then I will be okay. Then 30K was the barrier that we couldn't overcome. If not, if I see this level taken, I may expect a sharp correction, but looking to keep going, because nothing really is gonna happen if you see this area, at least until this area. I'm not expecting, let's say, a new low. So we are playing the probability game. At this area I can start to see, okay, maybe we can make a new low, because that's a good projection in terms of premium, you know what I mean? But yeah, that's it. Nothing really interesting for me. And S&P 500 as well, very similar price of last week. I don't have any clue. It's just Monday. I'm gonna expect something to happen this week, as news finally have been reduced from the previous weeks. It's not really nice to trade during extremely, let's say, impactful week. But yeah, I wish you an amazing week. Please support the channel, support with likes, comments. Tell me if I don't know if I can improve in anything, or if you would like me to do anything special, any topic about the mindset, about my trading, what's my strategy, anything that you have in your mind. Please subscribe to the channel, activate your notification, and thank you for watching. Have a good day and amazing week.